and welcome to Hilltop Wealth Advisors Economic and Market Update for the third quarter of 2020. I'm Chris Hostetler here today with David Wise. Dave, let's get right into it, shall we?
Awesome. Glad to be here. Looking forward to it.
I think the biggest question facing investors right now is what the economic reopening post-COVID-19 looks like. And for me, the theme is that we are not going to get back to normal in a post-COVID environment, but we will get to a new normal. This reminds me of the concept of reverse culture shock, which is something I experienced in my college years after spending about 6 weeks in China one summer. There was certainly some culture shock while I was in China, but I personally found it much more jarring to come home and experience some culture shock back in the United States. And, my perspective and routines had changed while I was gone, and it took me some time to get used to the new routines at home. We're probably all facing some reverse culture shock after the economy reopens and we're able to go to work, school, church, and restaurants again. Things are going to be different than before, and we will have changed. So I think if we can all face this reentry knowing that things will feel a little bit weird, we'll probably be better prepared for the new normal. But that's enough philosophizing for now. We should probably talk about the investment since this is our market outlook.
Yes. Great. I think, when we think about how we got here, man, it's been a wild ride this year. So many ups and downs. January, we were off to really a hot start to the year in the stocks and bonds, and that poured over into February. And then once the coronavirus really seeped into the U.S. and the world, we saw darkness. And I joke with clients that here in North Carolina and maybe around the rest of the U.S. that when they shut down March Madness, we knew this was a real thing and to take this serious. So with that being said, the market fell drastically in March. There was a panic sell on both stocks and bonds. Really not many places to hide outside of cash. From there, though, the federal government stepped up in a big way. You had the Federal Reserve cut interest rates quickly to zero and also step up in their stimulus programs there. In addition to that, you saw the Congress implement a CARES Act stimulus bill, $2 trillion of stimulus into the economy, which really started and created a floor in the markets. And from there, we saw a little bit of light at the end of the tunnel when they started talking about reopening the economies, our local governments, and the states around the U.S. And that's where we are today at this point.
Yeah, it's pretty amazing with the big stock price drops we saw in the first quarter. We've seen an equivalent recovery in the second quarter to the point where the U.S. stock market is back pretty much where it started the year. And bonds, meanwhile, have done well as a safe haven investment. The Barclays U.S. Aggregate Bond Index is up about 6% so far this year. And that's where we're at.
Yeah, I think it's important to note, and a question that we often get is, well, how can the market be back to year-to-date numbers, but the economy is still way down here in dire strains? And so with that, we have to remember that the stock market, the S&P 500 is looking forward 12 months into the future, pricing in expectations for earnings, and the economic information that we get is looking backwards in the past 3 to 6 months. So naturally, there's a disconnect, and that disconnect and dislocation is larger during these recessionary periods, and that rings true in other recessions of the past. When you look at 08, 09, we saw a similar instance.
Yeah. So, Dave, what would you say is our outlook when we talk about the markets and what to expect in the near future?
Yeah, I feel like right now, so much uncertainty, it's unpredictable. And the truth of the matter is, when investing in a short time frame, the market is unpredictable. And there's a lot of uncertainties and challenges that we face right now when you look at coming up with a vaccine, better treatments for the virus, getting that under control, the political climate with the election coming in November. All those things are breeding uncertainty, not to mention rising tensions with China, which really dominated the headlines last year. So with all that being said, it's important to put that in perspective as far as uncertainty over short runs and the volatility of returns that we could see. So we want to share a chart that gave an explanation and shed some light on what we can expect with some of the unpredictability. So if we look over short time periods in this chart, going back to 1950, we have stocks, bonds, and a balanced portfolio. On the 1 year time period, you see such a vast, wide range of returns on the upside, but also on the downside. But what's important to note as we go out further in time, 5, 10-year rolling time periods, those ranges really start to tighten. And what we glean from that is that the market's unpredictable always. Although right now it just seems like there's so much extra volatility that we need to be concerned about. In most time periods, that is the case. We have uncertainty, it's unpredictable, but if we can keep a long-term view, that's really going to be beneficial because the market's much more predictable over 5, 10, 20-year time periods.
Yeah, clearly right now, the biggest discussion is, as we've mentioned, the recovery from coronavirus and the shutdown. A part of that is unemployment. How quickly do jobs come back? And I think for many people, that's the single biggest factor, is whether or not they're working and at full capacity. There's a question of earnings growth for one sector versus another. We think this is going to be pretty lumpy. Some sectors actually benefit from the new normal. Others, like travel and leisure, are going to find it very challenging to find revenues as we come out of this, just as they are now. And then long term, we think that the relief programs and the stimulus that Washington has implemented to help in the short term have also created a large bill that we are going to have to pay back. This could lead to higher taxes, and it could lead to slower growth going forward. And then there are some other non-virus related matters of uncertainty. We have a big election coming up, and it's pretty common to see short-term volatility leading up to a major election, most particularly when it's uncertain who is going to win, which is usually the case. But if the outcome seems certain, and then certainly once we know who has won the election, that does tend to settle down. And then along with those things, there are always the same risks out there, including ongoing trade frictions, questions of earnings growth, and a slew of the more common economic questions. So Dave, maybe you can talk about how we're managing for these concerns.
I think it's really important right now to focus on what we can control. It's easy to get focused on all these other things that we can't control. And what we can control is our attitudes, our emotions, our discipline process, and the way we view investing, keeping that long-term view. And that's going to help us continue to put ourselves in a better position in our plans and meet those goals that we have. And at Hilltop, we want to position ourselves and our portfolios to take advantage of the next couple years. When you look back, recoveries tend to produce a lot of solid returns. And so if we can be patient during these tough and uncertain times, the fruit is typically made during the recoveries. And that's what we're focused on. And that's something that we can put our aim at.
Yeah, there is opportunity if we can stay patient. And this calls to mind an important economic concept called creative destruction, which describes the process in which old goods and old methods of production are replaced by new goods and methods. Most often, this is caused by innovation, new technology, new ideas, but it can also be the result of disruptive events like a pandemic, which lead to those new ideas and new technologies. So if you're familiar with how a forest fire, while it's destructive, it can also enable richer biological diversity and encourage new growth afterward. Creative destruction is a pretty close economic equivalent. And following this virus situation, there will be new opportunities for companies who can sell more effective air filters, who can improve teleconferencing technologies, provide socially distant dining and recreational experiences, and so on. So it is important, as you mentioned, Dave, to position portfolios to take advantage of the upside that typically comes with recoveries.
Yeah, I completely agree. And I think what most folks are looking to have is peace of mind right now. It's such a commodity, especially in the current environment and the state of life that we're in. And in order to achieve true peace of mind right now and empower yourself, you can do that in two ways. You can have a strong financial plan in place, and you can have a thorough knowledge of the risk in your portfolio. And the combination of these two really helps you put some of those emotions to the side, and it puts you in a position to make small course corrections as opposed to large ones when
Yeah.
these events happen. And that's really important. It's never too late to plan for your future. And when crisis hits, you need somebody in your corner looking after your future. And that's where we can help. We don't know where the markets are going to go the next 3 months or 6 months, but we can help you prepare and plan for the unexpected and make sure that you put yourself in a position to reach those goals. I want to thank you, Chris, and I want to thank you all for joining us today. And a special thank you to the essential workers out there that are on the front lines, putting their lives at risk for us, long hours away from their families. We salute you. We thank you. We hope everybody enjoyed this and learned a little something along the way. We're happy to talk at any time, but if you'd like to learn more about Hilltop, you can check out our website or visit the Hilltop Views blog. We'll see you next time from Hilltop.